Hi, Michael.
Hi, Charles.
Wow, it has been a long time since we last met. So, during this time, how many properties did you buy?
I've been going around looking, going to sales gallery, looking at properties, new properties, sub sales. I'm looking for good buys. Yeah, nowadays, if you're looking for good buys, now is the time when market is down. Yep, and I have not bought yet, but I hope to do it very soon during this time.
I hope you invite me for housewarming very soon.
Oh, sure, sure, definitely will invite you. Yes.
So, thank you for joining me today. Perhaps we start with a very brief introduction about Kopi and Property.com since this is Kopi Talk. If you love to get updates on everything about investment, especially about property, subscribe or visit us often. We are Malaysia's leading independent property blog with over 30,000 visits every month. And currently, there are over 4,400 articles for your reading pleasure. Charles Tan is the founder. That's me. Together with me today is Mr. Miichael Yeoh. He is the CEO and founder of GM Training Academy. He is an expert when it comes to mortgages. And every time I talk to him, I learn something new, just like all of you today. He gives talks very often and is often engaged by developers, property developers especially, in order to help their potential home buyers with advice on mortgage. Michael and I have spoken on many occasions together, and today we are going to enjoy chit-chatting for your benefit, especially on home refinancing essential. Michael, thanks for joining me in today's Kopi Talk.
Thanks for inviting me, Charles.
Yeah, my honor is mine. So our topic is something which is asked by many property or homeowners recently. The home refinancing essential, the whys and the hows. Michael, we have been in the COVID-19 pandemic since March.
Mm.
It is now towards the end of November and we are in our third wave. Has there been many homeowners who approach you during these past 6 months on refinancing? Are they facing financial difficulties or are they approaching refinancing with very good reasons to do so?
If you look at, I have two things that I can share with you. Actually, refinancing, yes, there's a lot of borrowers who call me up to do refinancing. Okay, ask for help. There are also a lot of people, okay, new buyers who buys new properties, even with developers, sub-sales. There are you if you talk about market is bad because of COVID-19 pandemic, all this, I people still buys, people still refinance. Yes, they can refinance for a few things. Yes, to release their cash. They have to cash out in view of their worry of losing their job in future. All this. There are many other reasons why people go for refinancings. Yeah, yeah. Just if you look at it, the market has been going, yes, been going sideways, all this. But look at the bright side. People, the banks are still lending. Yeah,
Mm,
people are worried. People are worried. The bank is getting more and more difficult. Yes, I have no doubt about it. But if you do it the right way, if you know the tricks and trick, okay, of doing if borrowing from a bank, okay, the bank still can lend to you. This is something that people are worried, but I'm telling you, the banks are still lending.
yeah. And just to echo Michael, within the first half of 2020 this year, despite the fact that we have a shutdown in March and April and even May,
Hmm.
the total property transactions for residential properties alone is over 75,000 units. That
Yes,
means banks are definitely lending,
yes.
just like what Michael has just shared.
Hmm.
Michael, please share with us the first reason, number one reason why people do refinancing today.
If you look at it, since this year in January, the rates has been coming down, the OPR.
Yeah.
Okay, he has, yeah, I think as of now, he has gone out 4 or 5 times already. Today is at 1.75%. Yeah,
Mm,
it's very low as compared to 10 or 12, 13 years ago. is very low and very conducive for lending. Okay, if you compare this, when I was in Standard Chartered Bank was 97, 98. You
Wow.
know how much interest rate we are paying? Average interest rate, now you are paying like average interest rate around 3%. Average interest rate, effective lending rate. Last time our effective lending rate was around 14%, 13, 14%. So you do your calculation, how many times more? So if you look at it, now is a good time. People refinance. Yeah, people take advantage of the low interest rate. People take advantage of the low interest rate to refinance and also to even to buy properties.
Mm,
Yeah, and I would say the low interest rate regime, it will last for at least 2 years. Here you'll be looking at around 3% to maybe a maximum of 3.5%. You'll be 1 or 2 years. It will be stagnant around this right. So it's very conducive for you to refinance or even to if you want to buy a property. Yes, this is a time. Yeah.
yeah.
Mm,
So thank you, Michael. Let me perhaps share the number two reason why people
mm,
do refinance. In
mm,
fact, if we look at the property market, they
mm,
always say that this is the buyer's market.
mm.
However, even though there are so many opportunities, we may not have the cash to do so. We may not have the fund
Correct.
to do so.
Yeah.
Therefore, those who have built up enough equity in their home loan
Mm,
over many years, actually they can now do refinancing.
mm,
Because by refinancing, they could obtain a whole huge amount of money, and this will be enough for them to enter the market and invest
correct.
into the stock market, even,
Mm,
right? Not just the
mm,
property market.
mm.
Plus, as usual, they may also use the money to buy a car. However, this is not advised, even though there's no sales tax and you get some savings. This is
Mm,
because the day you get the car, the day you start the engine, the car price has already dropped 15%. So if
yeah.
you do refinancing just to buy a car, this is not encouraged. Michael, what's the third reason why people do refinancing?
I would say because a lot of people they want to do refinancing, they want to shorten the tenure years.
Mm,
Means they want to finish earlier. Okay, let's say you have another left with 25 years. You do refinancing, you do a proper one, then maybe you can do finish within like 15 years or less than that. Okay,
mm,
because you take advantage of the low interest rate, and you also choose you have to choose the right bank packages that can help you, okay, reduce the tenor and also the interest rate.
yeah.
Okay, if you do that, it will help you in finishing your loan at a faster rate.
Mm,
So you save actually you save a lot of interest by finishing earlier. Okay,
mm,
by finishing, there are a few tricks and tricks that you can use to finish earlier, and this is part of it. Refinancing is part of it.
mm,
Yeah,
yeah.
yeah.
So typically, Michael,
Hmm.
how big would the savings be? Like extra.
It depends. It depends on the loan amount.
Mm,
So typically, even if you have a 500,000 property, okay, let's say your interest will be paying like let's say your interest will be paying like 800,000.
mm,
Okay, 800,000 interest. Let's say lah.
mm,
Okay, you'll be saving nowadays. You save at least five two 300,000 of interest a day if you do it the right way.
mm,
Okay, there's yes, it's refinancing, but there's other elements to that,
mm.
so it will enable you to save even faster than this.
Yeah, correct.
Yeah, yeah.
So maybe I share the fourth reason why refinancing may be good.
Hmm.
In fact, this is opposite to what you shared just now. You were talking about reducing the tenor, right? Actually,
Yeah.
some people do refinancing because they want
Hmm.
to lengthen their tenor.
Hmm.
This may sound strange because we may
Hmm.
be paying higher interest like what you shared, Michael.
Hmm.
However, we can
Hmm.
imagine having extra few hundred
Hmm.
savings every month.
Hmm.
Which these few hundred, actually we can do it, use it for any purpose we want. This is something which can also be good, especially
Hmm.
during times like the COVID-19 pandemic.
Correct.
because sometimes your income may be affected, therefore
Yes.
to reduce the mortgage that you are paying. Yeah,
Mm.
so this is a very good way for
At
us.
least they can hedge the future lah. At
Yeah,
least they can hedge the future. Yeah.
especially when at times when the income is reduced
Affected. Yeah.
tremendously, every
Yeah.
cent actually counts. And
Correct.
well, perhaps when times get better, we can then do another round of refinancing, right, Michael?
Yeah, but you be careful on like we are in a topic of refinancing. You be careful. Please take note. There is a lock-in period.
Ah,
Even you refinance from other banks. Okay,
yep.
let's say from bank A to bank B.
Mhm.
Bank B, there's a lock-in period. Nowadays, there are banks. Okay, they have a 3 years lock-in period or 5 years lock-in period. So there'll be a penalty if you were to refinancing or even you sell a property before that. So there will be penalty between 3%. Average is three
Oh,
percent among the banks, three
yeah.
to 5%. Okay,
Mm.
during my time, okay, there was more than 10 years ago. I
Mm.
seen before 7%.
Wow, wow.
They even charge 7%, and there are also management fee
Yeah.
charge
So,
two
so
or
this
three
percent
thousand
is
on top of 7%. Yeah,
so this
yeah.
percent is levied on the principal amount or on the interest. The is on.
Principal original amount.
Oh, wow,
Okay,
that's a lot of.
now it's original amount. Last time, okay, it's a bit of tricky.
Mm.
What I always tell my customer is, okay, you want to be better off with the bank. You pay to the maximum first. Means you dump in the principal. So
Mm.
you are left with, let's say, out of 500,000, you're left with 100,000 principal.
Yeah.
They go by outstanding. The bank go by outstanding. But today, the bank go by the full amount. So you have to be careful on this. Now it's different. The banks wake up already. Last time the bank is sleeping. Now the bank is waking up.
And
This I need to caution. You need to read your letter of offer carefully. Okay, read carefully before you sign the dotted line. Different banks, they have what they call different rules and regulations.
mm,
Okay, you have read one bank and compared to another bank, one bank can be more rigid than another bank. So
mm,
you have to be careful. Read between the lines. Don't
yeah.
understand, ask a banker. Still
Yes.
don't understand, ask a lawyer. And still don't understand, ask me.
So what's the typical tenure for the lockdown, Michael? How many years do they lock you down?
Normally the bank will go for 3 years.
3 years lah.
Normally it's three. Average, average. Um, some banks might have 5 years, but average 3 years.
Okay. Okay.
Average 3 years. The main banks are.
Mm,
Yeah, yeah.
yeah. So I'm very sure there's one more reason, Michael. There's one more reason for
Mm,
refinancing. Can you
mm,
share with us?
yeah. Okay. People refinance because of this. Okay, I've been doing quite a few of cases on this. Even of as recent as last 2 days, I have
Mm.
received a case. They want to consolidate their debts.
Oh.
Debt consolidation. Okay, refinancing you can consolidate. Let's say you have many types of debts. You have
Mm.
you have housing loan, you have credit card,
Yep.
you even have car loan.
Mm.
If you have personal loan and whatsoever,
Mm.
okay. What happened to, like, I give an example, the recent case that I did. Okay, he has 4 or 5 of this.
Oh.
We consolidate into one loan only.
Mm.
We consolidate everything. Okay, you got to make sure that the market value of the property
Mm.
has increased tremendously.
Mm.
If not increased, it cannot cover your other debts. You
Mm.
cannot be, or you cannot dump in everything into one loan.
Mm.
Okay, why you dump into one loan? Your installment repayment, your monthly repayment will reduce tremendously.
Mm.
So they are worried, in future, you might not have a job, or so they hedge against that.
Mm.
So instead of like this guy, he's been paying. Okay, before this he's been paying, I think, eight eight over thousand, eight
Oh.
over thousand. After I have done consolidation for him, he's paying around 5,000 only a
Oh.
month. So reduced by 3,000.
Yep.
Yes, it is a process. So don't get me wrong. You need to choose the right bank.
Mm,
Refinancing note is, or this bank also can take, that bank also can take. No, to me is you have to take a bank that is right for you, that
mm,
is suitable for you.
mm,
Okay, suitable for you. Yeah,
mm,
and this guy, this guy who choose,
mm,
okay, he chooses a package like that can help him to
mm,
manage his loan
mm.
once the flexible package that he can do a lot of things in future with
Oh,
with his exiting debt. Yeah, this is what he does.
mm,
Yeah, so if you ask me, I think a lot of people are doing debt consolidation now,
yeah.
even if we are speaking now.
Yeah.
Yes,
Yeah.
yes, I think that's to me it's a good time. No, interest rate has gone down so much already, so
Correct.
it's that's why you can reduce paying your installments
Mm.
so much already.
Yeah.
Yeah,
Yeah. Correct.
yeah.
Especially when the credit card debt is supposed to have 18% to
Yeah,
every year.
18%, credit card 18%, 1.5% a month. So
Mm,
instead of paying 18% a month, you throw into your housing loan, you consider in your housing loan, you're
yeah.
paying about 3% only
Yeah. Correct.
1 year, or
Correct.
else you'll be paying 1.5% a month.
Wow. That's a lot.
Yeah, personal loan, you're talking about like 7-8% a year. So
Mm,
you consider into your loan, you're paying 3% only.
mm, yeah. Correct.
Yes.
So perhaps now we just take a look at a few reasons why we
Mm,
should not do refinancing. So just now we were talking about why we should.
mm,
Now we talk about why we should not do refinancing.
mm,
Let me share the first reason this time.
mm,
We do refinancing, but we have no reasons determined yet.
mm,
So we do not know why, and we do have no intention with the extra cash. Of course, some of us may be attracted by what our friends were saying. They have told us how much cash they have, how much interest they are just paying right now. And suddenly we feel, okay, I must also do refinance, and we follow. Seriously, please remember that when we have less than 10 years, for example, on the loan, and now we refinance and push it back up to 25 years, for example, the
mm,
interest, total interest that we pay will
mm,
actually be much, much higher. So if we have the cash from this refinance, but we are not doing anything with it, it is a double whammy because first of
mm,
all, the cash have no return on investment. Second of all, the interest that we pay for the home loan, which we have just refinanced, is by far a lot more compared to what we would have been paying if we follow the remaining tenure.
mm.
So, Michael, can you share with us a few other reasons why we should not do refinance?
Okay, maybe I give you an example. Yeah, this is a real case that happened to one of my borrowers.
Oh,
Okay, I've actually done refinancing for this borrower. There is a few years back. Okay, a few years back. I can't remember. Maybe 3 to 5 years back. Okay, now, yes, he's at the time he needs the money. Okay,
oh.
to settle his debts. So he do a refinancing on the property. Okay, so he clear, then he got cash out. He got a very big of cash as a reserve.
Mm,
So practically I save him from going bankrupt.
wow.
Yeah, but okay, the thing is this: the whole thing starts again. The debt starts to coming, borrowing starts, credit card. We consider all the credit card, we settle the credit card, but the credit start to pile
Ayo.
one after another. The whole thing starts again. Okay, yes, refinancing is good if you do a proper financial planning.
Mm,
If you don't do a proper financial planning, you're going to start all over again. But
yeah,
remember this,
yeah,
start all over again, but remember your loan you still have to pay already.
yeah, yeah.
Yes. Okay. So you go for a maximum loan is really maximum. You cannot, you refinance can save interest rate, but can you do a cash out just because a few years now maybe the valuation cannot go up, all these things.
Mm-hmm.
Yeah, this actually happen to people. Okay,
Yeah.
it's sad, but it's actually happening. Yeah,
Yeah.
it's we have to do a proper
Mm-hmm.
financial planning. I'll call it mortgage planning lah. I
Mm-hmm.
call it mortgage planning. Yeah, there are no, if you don't plan properly, the things will reoccur again. You start all over again. It's very stressful. I can tell you, it's very stressful. I can see a lot of family breakups because of this also. Okay, it's not healthy at all,
Mm,
Charles.
yeah, and especially credit cards, right, Michael? Because once you are used to spending so much,
Yeah,
you continue to spend that unless you somehow convince yourself that
correct.
I have consolidated, so I should not be using my credit card. So do you think if they consolidate their credit card debts, they should just cut their credit card? Don't use credit card?
That is the best way. No, one thing about credit card, it's not cash. It's just a card. Okay, it's just a card. So when you spend, you are not spending money. You are not taking out from your wallet to spend, right?
Yeah,
So credit card, we tend to spend more
yeah,
because we don't see it.
yeah.
Okay, the problem is this: at the end of the month, you still have to pay, and a
Mm,
lot of people like to do this.
mm.
Buy things on credit. They
Oh,
thought, oh, buy TV, buy this, buy that on credit. Then there is a monthly installment, right?
mm,
Yeah. So everything adds up, it will be a lot already,
mm,
Charles.
mm,
So this is something that I'm worried.
mm,
Okay, this is something I'm worried. Yeah. I can see that even today, okay, people are using a lot of credit cards.
mm,
Okay, a lot of credit cards, the debts are piling.
mm,
So if the bank, even if the bank sees this, okay, is the bank sees it, as I try a bit. If the bank sees this, you've been using more than 70% of our card limit,
mm.
they don't like to lend to you really
Oh,
because
okay,
you are.
70, huh?
They term you as a high risk person.
Oh, okay.
And you have many cards. Every card you use more than 70%, some even 90% or maximize it. Do you think the bank can lend to you? Even you want to buy a new property, you want to refinance, the bank still doesn't want to lend because you are higher risk. The risk of repayment, about your repaying the monthly installment is very high to the bank. You might be paying a few months after that. You like that the bank are worried about these borrowers.
Yeah. Also, Michael, when the bank consider the refinancing, right?
Yeah.
They also take into account the debt service ratio as well.
Yes, definitely. If you buy a new property, if you refinance, they will look at the debt service. But debt service ratio of DSR,
Mm,
different banks have a different DSR ratio.
mm,
Okay, some banks have 60%, some 80%, some 90%. Some have tiered rates. Okay, tiered rates meaning if your income is less than, let's say, 50,000 a year, your
mm.
DSR is 50%. If
Wow.
more than 80 to 85,000 a year, maybe your DSR is 85%, something like
Oh,
that.
okay, okay.
Okay. Actually, the most bank now have date rates already. Okay,
Mm,
they doing, but DSR has been going up lah. Last time when I was in Standard Chartered Bank, there was in 97 97, 98, the DSR was 33%
oh,
only. We call it one-third income criteria, but last time no secrets.
mm,
So we don't know your other debts, but
yeah,
today we know, right?
yeah.
Okay, now the debt service ratio has increased to I think even at one bank is 90%.
Wow.
Meaning if your debt is 900, your
Mm,
income is 1,000,
mm,
loan can be approved, but that is still
mm,
you
yeah.
have to be careful in that. And some banks, case on case to case ratio, okay, I've done it before. Even though they have breached the DSR, there's one case I have done before,
Yep.
100 and their DSR 150%. It's double
Yeah.
no banks will lend.
Mm,
But we found a way, okay? We found a way because he have a good supporting documents.
oh, okay,
Okay?
okay.
But based on the case to case, it's about who you know in the bank. Okay, sometimes it's about who you know. So because I know the banks have been doing this for 20 over years, so I approached the bank the right way. This loan, okay, it was rejected by many banks. It was approved by this bank at 85%.
yeah,
It's a commercial.
correct.
Yeah, so that's why I say you must learn the tricks and trade of the right
Yeah,
approach on the banks on the documents.
correct, correct.
Yeah, yeah.
Yeah. So thank you, Michael, for all the sharing. I think a lot of us did not realize that there is such a thing called debt service ratio. So perhaps
Yeah.
I'll just move on to the steps which we should take in order to make sure our refinancing is a successful one.
Correct. Okay.
I believe the first one is to set a goal.
Yes.
So it can be to reduce the monthly payments,
Hmm.
because when we reduce the monthly payment, we will have extra money. So
Correct.
do we have a reason, or do we want to have something that we want to do with the extra money, right? That may be one of the things. Is it because when we refinance, we would have the extra cash or extra funds? We want to use that fund to buy a property. If it's a property, do we want to think of that property as an investment property, or are we actually buying the property for own stay? So once we buy it for own stay, what happens to the one that we are staying? Is it to buy some blue chip counter or even speculative stock counters? Basically, we have to understand that the stock market is, of course, more volatile.
Yeah.
But if we understand the risk, if we have a reason, a
Hmm.
strong one, we
Hmm.
have done
Hmm.
some risk calculations,
Hmm.
we should go ahead. And by the way,
Hmm.
for those people who intend to refinance so that they can finance the university fees of their children's education, please remember that the fees that we pay, our children can only earn and pay us back many, many, many years later.
You are right to say that.
And of course, when it comes to education funds, actually there are also some other loan options, and it
Hmm.
does not need to be refinanced the home that you are currently staying in.
Hmm.
So Michael, we have looked at all the reasons and all the goals, and I guess that is one of the most fundamental thing that we must consider, right? So
Correct.
after we know all that, so what happens next, Michael?
No, you get once you get the objective goals right. Yes, you know what you want. Okay, important is do a proper financial planning. Okay, pay what you can afford.
Mm,
Okay, if you can afford after doing your financial planning, you can afford paying like 5,000 a month installment. Okay, you don't go and buy a property or do your installment. You are paying at 8,000 property. You don't go and buy 8,000. Okay, if you because you can afford financial planning.
mm,
Yeah, this one are what would like to advise the borrowers. Yeah, many of those, many borrowers, many buyers, they buy what they cannot afford.
mm,
They buy over. So when during the bad times like now, during the COVID-19 pandemic, all this, so they lose tenants, they lose all this. Sometimes it's difficult, more difficult to get tenants. So if you are unable to pay,
mm.
then the problem rise.
Yeah.
So that's why I say buy what you can afford. The best is this: if you want, maybe you want to hedge the whole installment at least 12 months.
Mm,
Is what I feel lah. Last time is 6 months, 12 months. Let's say your installment is 5,000. Make sure I have 60,000 on hand.
yeah,
You
yeah.
want to invest or whatever you want to refund, you must have a cash on hand
Mm,
before you go forward.
yeah,
That's what I believe.
correct.
Yeah.
So is the bank or even the finance rate very important as well in this case?
Yes, definitely, definitely. One thing, yes, is important, but second thing is you also must get the right bank.
Mm,
Okay, getting a right bank. Sometimes the right bank doesn't has to be the lowest interest rate, but the right bank because they have features that you can use to assist you in your future borrowing.
Oh,
Or your debt consideration, they have some features. So to me, okay, the best bank,
mm,
okay, is not necessarily the one with the lowest
mm,
interest rate.
yeah,
Yeah, because most people have this idea. Let me go for the lowest rate, introduce the lowest interest rate for me. I get this every day, but I keep telling them the best bank, not necessarily is the lowest interest rate. Let me know what you need. Like what you say, the goal, the objective is
yeah,
important. What you want.
correct.
Okay, from what you want, we will select the best bank that can fit your portfolio.
Mm, yeah,
Yeah, like the one I did for one customer, I narrowed down from 8 banks to 5 banks to
mm,
3 banks, and at the end only one bank.
wow,
That is called a proper consultancy, I would say.
yes,
Okay, so you must know what the client wants.
mm,
Then you only give them what this bank can help them to save more in future.
yeah.
Yeah,
In fact, once we have found the best for us, actually
correct.
we should apply to a few banks. Am I right, Michael?
Yes, yes, yes,
Yeah.
yes.
The
Yeah.
reason why is because, ladies and gentlemen, when we apply to more than a few lenders,
Hmm.
then we are really able to understand what the differences are in terms of the amount payable.
Correct.
And in fact, when we have more options, that means more than one option,
Hmm.
now we have a little bit more negotiation power and we have more choices as well. Versus if you apply to one and that one got approved, I mean, that's the only one that you will have to take, right?
The best is at least two banks. Oh.
So
Yeah.
Michael, assuming that I have a few approved refinancing deals in front of me now,
Hmm.
how do I actually choose the best one? Yeah, Michael?
Yes, I have actually I have this customer before. Approved many banks.
Wow.
Then throw the offer letter in front of my table. Michael, help me to choose which is the best. Again, I ask them, what is your objective? So
Yeah.
we have to go through what's your objective, what is your affordability, all those things. Then I start to knock off bank by bank. Then
Mm,
I tell them, okay, this bank is more suitable for you.
mm,
So it depends on the person.
mm,
Okay, doesn't different person have different things. Yeah. So you look at way different borrowers differently. So
mm,
the question that I ask them is more personal to them.
yeah.
Okay, to the way they even to the way they pay the loan is
Yeah.
very important.
Yeah.
So all this will help them in future.
Mm.
Yeah.
So for example, right, we have heard of flexible rates as well as a fixed rate.
Actually, yes.
How do you determine which one is better for you, Michael?
Okay, if you are a person who can pay extra, okay,
Mm,
anytime if you do good financial planning, every month you have extra money.
mm,
Flexible rates is very good. Anything you pay extra,
yeah.
even a minimum of 1 cent, 2 cents,
Yeah.
you can do that.
Mm,
So it's a like via current account.
yeah.
Okay, you can take out the money that you pay extra.
Mm,
Okay, you can take out is by way of ATM card, online transfer, checking is a checking account, current account.
mm,
Okay, that is flexi loan. Yeah.
mm,
I myself, my personal housing loan is also a flexi loan. It pay
mm,
off every. I can pay in advance. I can take out anytime. But for term loan,
mm.
okay, term loan you need to inform the bank. Okay,
Uh-huh.
you want to pay another lump sum of 10,000 in principal. You need to inform the bank. If
Okay.
you want to take out, you need to inform the bank also.
Mm,
Okay, there is certain charges. Some bank charge 25 ringgit to 50 ringgit.
yeah.
Last time when I was in the bank, when I was in Standard Chartered and Hong Leong Bank,
Yeah.
you need to give 3 months notice.
Wow.
Standard Chartered Bank. Before you want to pay 3 months notice, you
Mm,
want to think about what you pay the principal in case you need the cash.
mm,
Also 3 months notice. Now no need. Okay,
okay.
you can do it immediately. Maybe they will take 1 2 days to process.
Yeah.
Okay, they need 1 2 days to process. Yeah.
Mm. So these are some of the important things, right? So
Yes.
Michael, any other things that I should consider? For example, if I'm a preferred customer to a one bank, right? So should I take that bank first since I'm a preferred customer? Do you think I would get a better deal?
Yes. Okay. Different banks. Okay. As a preferred customer, you are special preferred. Okay. They have their interest rate will be lower than the prescribed rate. Definitely.
Yeah.
Okay. Yes. Definitely. If you have if your money with the bank, approval definitely is easier.
Mm,
If you are preferred customer, what they give you is yes, approval easier. Interest rate is also lower.
yeah.
Maybe people are taking 3% average. In fact, you'll be getting 2.9%
Mm,
because you are a preferred customer.
mm, okay.
Yes. Yeah.
So the main choice should be to start with the banks that we are
Mm.
preferred customer as well, right?
Yes.
Rather
Yes.
than a bank that we are trying to approach for the very first time, right?
Yeah. Just for easier approval,
Mm,
create a relationship with the intending bank you want to apply.
mm,
It will be easier. Maybe okay, 6 months down the road, you think you want to buy something already,
mm,
buy a house.
mm,
Open an account, create a relationship with the bank. Put your FD inside. So
yeah,
once you create a relationship with the bank, things get easier.
yeah,
Okay, approval, the bank can be more lenient in your approval.
yes.
Yes. Yeah.
So everyone understand? Just create some relationship with the bank that you may want to do a refinancing in the near future, right?
Yes.
So,
Correct.
Michael, today we have discussed so many things about
Mm.
refinancing. I hope all the listeners have gained a lot more knowledge and understanding about the refinancing,
Mm.
why and the hows. In fact, perhaps now let us ask Michael about some advice on property investment. Since we have been talking about refinancing, and we know everything about refinancing, what about property investment, Michael? Is this now a good time to buy? Because even if I refinance and I want to buy a property, I will want to know whether this is a good time to buy, right? So,
Yeah.
Michael, is this a good time to buy?
Uh, to me, okay, to me, actually, this is the one of the best time to buy when the market is down.
Yeah,
Why? You get cheaper properties. Okay, you don't buy when the price is high. Okay, when the price is high, you buy from me.
yeah,
Okay, I will sell to you. I will buy when the price is low. It's just like a stock market. Definitely, you won't buy at the highest price. You buy at the lowest price. Same as property. Okay, now is the best time. Let's say you even can find motivated sellers. You negotiate on the price. Oh, sorry, market is not good. I can only offer you this price. Hey, actually, you can save another, but maybe 30, 50,000 by because of this period. Yes, even developers are throwing freebies. Am I
yeah,
right to say that?
yeah,
Yeah, where can you find at this round? Okay, at this when the market is good, these people will throw in. It's a seller's market. When the
yeah,
market is good, it's a seller's market. Today, let me tell you, it's a buyer's market. Definitely, it's a buyer. Charles, definitely, you will agree with me, right?
yes.
Yeah, yeah.
In fact, for me, Michael, I think there's only one reason, which is a
Mm,
very, very easy reason to buy
mm,
a property.
yeah,
When we retire, we should stop paying rental. Because let's be honest, how many homeowners that we pay rental to for the last 30 years? When we retire, the owner tell us, oh, you have been a good tenant, you have paid me 30 years of rental. So from now onwards, you can stay for free. I'm not sure if there are any homeowners like that. And remember, everyone, the life
yeah.
expectancy for Malaysians are no longer 65 years old like in the 70s. Today, the life expectancy is 75 years, and in a few more years, it may even reach 80 years.
Great.
Therefore, even if I retire at 60, I will need to pay rental for the next 20 years. And this is the reason why, at the very least, we should have a fully paid property so that we do not need to worry about rental in the future.
True.
So, Michael, let us conclude today. Please give us a conclusion for what you have shared today. Tell us a very, very important few key points to take home today?
I would think, Charles, I would think that yes, bank is still lending. Very important is uh, you must know what the bank wants.
Yeah.
Okay, what the bank wants, what type of documents. The banks must be feeling that you can pay. You are a good paymaster. They will lend to you. The bank are still lending as of today. Okay, no doubt they are more rigid in approval.
Yeah.
Yeah, and another thing is I will have to insist on this: do a proper financial planning.
Mm,
Okay, as what you say, you must get the goal right. You must get the objective right. Do a proper financial. Make sure you can pay your installment.
mm,
Okay, you want to buy or you want to refinance, you must be able to pay. The best is to hedge 6 to 12 months of the installment.
correct, correct.
Yeah, 6 or 12 months. This is what I think is important to all the borrowers out there.
Mm,
Yeah,
yeah,
and uh, pay what you can afford.
yeah,
Don't go and buy or do anything that is out of your capacity of paying. Yeah, don't do that. Okay, I can tell you, a lot of people
mm,
get into this trap,
mm,
end up
yeah,
they are bankrupt.
yeah, correct.
Mhm.
So, everyone, thank you for joining us today. And thank you, Michael, for joining me for Kopi Talk today. So, everyone, stay safe, take care. Please do social distancing and wear mask when you go out.
Bye,
Bye.
everyone.